With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB. Wonderful to be here with you as we start the week pretty deep into the red. And why is the question? Oh boy. Yeah, we fell at the open and we've remained at this level, down by 1.5% for the S&P 500 for quite some time. We still have a lot of concern out there about tariffs and the looming so-called Liberation Day in the United States. Donald Trump saying that no countries are off his hit list for reciprocal tariffs. And S&P 500 futures are off by close to a percentage point. NASDAQ E-minis off by 1.2%. So just a very negative start to this week. Not only here though, but also in Japan, for example. Japan's market is off by close to 4%. And we've got the Hang Seng down by 1.7%. The composite in China off by a percentage point as well. So why? Well, those tariff tremors continue. I'll be speaking with my special guest, Josh Gilbert from eToro, about that a little bit later on. I suppose if you're looking for one bright spot, and excuse the pun, in the market today, look no further than the gold space, because of course we've got gold hitting record highs once again, all-time high, breaching the 3,100 level today in this Asian session, but still not enough to save the materials space. Iron ore coming under pressure, and that has put a lot of pressure on the big miners here today as well. And of course, we'll look ahead to tomorrow. So before Liberation Day, we have D-Day for the RBA. So Decision Day coming through. We'll be bringing you that live at 2:30 with a great panel of expert guests that we've lined up for tomorrow afternoon, followed by the Michelle Bullock media conference. But look, the consensus is a hold. I spoke to Mi Bui from AMP a little bit earlier on today. That interview is up online if you'd like to check it out. They're not expecting to get a cut coming through tomorrow, but they are still anticipating cuts this year. I also spoke with Charlie Callan from Bond Advisor earlier today. They reckon 2, maybe even 3 more interest rate cuts coming from the RBA this year. So I mentioned that the material space came under a lot of pressure. It was a big underperformer, really steep falls for BHP, $38.30. Boy, that is looking cheap. Clearly, not all the bad news priced into these stocks yet, with Rio Tinto off by 4% to $116.06. And the roller coaster ride continues for MinRes. Retailers were also on the nose. JB Hi-Fi off by 1.8 to $92.93. Premier Investments, $19.96. I had a chat with Raymond Chan from Morgans. I really enjoy his analysis. He was giving us his rundown of the Wesfarmers Investment Day. Whilst he does believe in the business model and Bunnings and its strength and the digital strategy as well, he reckons that Wesfarmers is pretty fairly priced. He would not be buying it today. Energy also under pressure, along with the price of oil, of course, usually reflected here. And that's just because there's big concerns about global growth in and amidst all of these tariffs and reciprocal tariffs. Also, Trump making a threat to tax Russian oil. Because, of course, he's not getting what he wants from Putin when it comes to the Ukraine deal. Tech also getting pressure today, save for WiseTech Global, which is up by 1.3%. So a rare spot of green on this market map today. Woodside is offloading its assets in Trinidad and Tobago for $206 million, not helping the share price. Auckland International will be discounting its prices for passenger charges following the New Zealand Commerce Commission's final report into price setting. Qantas has appointed Dion Weisler as a independent, non-executive director. Todd Sampson, the advertising guy, stepping down. Domain is unanimously recommending that shareholders vote in favor of that CoStar bid. And Aurora shares, after dropping really sharply late Friday, officials within the French Competition Authority are investigating the company, but Aurora said today it's confident that its business practices were appropriate, and so we've seen a little bit of a snapback coming through, up by 4.4%, saying that it is committed to cooperating with the French Competition Authority about that Saver Glass concern. All right, let's get to it, shall we, with Josh Gilbert from eToro. Gosh, Josh, we're nursing some wounds on this Monday. That was a pretty precipitous fall and just flatlined throughout the afternoon.
Yeah, look, really not a great way to start the week, Nadine. Great to be here with you. Look, it's just risk off, right? I think everyone's starting this week around obviously Liberation Day sort of coming through, and it seems nothing is ultimately safe today. Even sort of Europe, that's been ultimately a relative, outperformer this year, up whilst most other markets are sort of down. I think it just showed that in the near term, investors are just sort of, in sort of risk shedding mode. And that's why we're sort of seeing gold hit sort of record highs again today, back at, above 3,100 for the first time ever. Look, whether that continues throughout the week will be sort of yet to be seen, whether this is sort of an early, sort of sell the news type of event, and when we actually sort of then have the D-Day actually sort of coming in, whether it actually is as bad as we're sort of expecting. But obviously we know that sort of Trump is just sort of going pretty wild at the moment, right? Even just sort of some of the commentary that's sort of come out overnight and early this morning, everything is sort of changing from day to day, and so it's sort of no wonder that we're sort of seeing a fair bit of red across markets today. But I think that we might sort of settle down as sort of the week goes on a little bit, and I think investors are sort of trying to prepare for the worst right now.
Okay, so the worst not being priced in. I mean, that's what markets are telling us right now.
Yeah, exactly. And that's exactly what we're looking at, right? And I think that sort of sell-off that we're getting today is exactly the price of that fear coming through in markets. And whether that, as I say, really sort of moves through until the end of the week, that's I think, we're sort of getting the worst of it right now. I think we're sort of seeing people saying, okay, look, the uncertainty, the volatility of Trump himself sort of coming through, we are going to sort of go risk off and sort of just try and price in sort of the worst possible outcome. So we may get a couple of days of red, but I think when this sort of day comes to fruition, and I think towards the end of the week, I don't think we'll sort of see this continue throughout the week. I certainly think we'll probably get some sort of relief rally in there throughout this week. I don't think we're just going to see continuous red throughout the week. I think we're going to sort of see it really start off. And again, a slightly different scenario, right? But when we had that sort of Japanese, yen carry trade unwind at the back end of sort of last year, or the middle of last year, it was a very, very sort of volatile start to the week, very similar to what we're seeing today, right? Broad selling, markets all in the red, a lot of fear and panic in markets. And then once sort of markets settle down, I think we actually finished the week off pretty flat. Not saying that's exactly what's going to happen here, but I would expect something similar to sort of play out if these tariffs don't actually come to the sort of the full-blown risk that markets are sort of pricing in that we're seeing right today. Got
it. So what do you think the commentary is going to be like from the RBA tomorrow? Do you think it will be hawkish? They're going to have to reference the tariff situation globally.
Yeah, absolutely. Look, I think they look a bit out of touch if they don't. Obviously, the sort of the clear, overarching message here is that they're obviously going to keep sort of rates on hold. I think that from the data that we've had in sort of recent months, that inflation data coming in cooler than expected, a little bit earlier in the month. I think all eyes sort of really turn to that sort of quarterly data coming at the end of April before we sort of get that decision in May. Market's seeing about a 70% chance that we get a cut in May. So far, they've sort of pushed back against those expectations of another cut coming pretty soon, but markets are obviously sort of trying to sort of price that in. But yeah, look, I think if depending on what Michelle Bullock says around rates and what she says around those tariff concerns, that sort of 70% might sort of dial back a little bit. But I think it's going to be hard for her to really try and take too much of a hawkish stance, given that we are sort of getting pretty good data here locally that is supporting this idea of a cut. But again, really the overarching message is probably going to be what's happening from a global perspective rather than maybe what's happening on our own doorstep. That could be a bigger risk for the RBA than, as you say, some of the data that we're getting locally.
Okay, so gold hitting, I mean, in this environment, in this uncertain environment, one certainty, it seems these days, is that gold will perform, smashing through that 3,100 level. I mean, can it still keep going?
That's a big question, actually. We did a piece on this sort of towards the end of last week to sort of say, look, firstly, does gold deserve a place in an investment portfolio in 2025? When we think about tech and AI and everything else, it's sort of showing why we sort of see it as that safe haven asset, and even sort of a small exposure over a time like this can sort of really come in handy, can sort of really bring that balance to a portfolio, bring that sort of little bit of reassurance. And we're up over sort of 18-19% so far this year when global markets have sort of in the red. So really, really positive. Whether that can continue is going to be sort of, I think down to obviously that this sort of potential, fears around reinflation. If US growth stumbles a little bit, if sort of we still continue to sort of get fears around tariffs ultimately. I think if we do start to see some of these sort of tariff concerns ease off a little bit towards the end of the week, then, we might see sort of the prices top out a little bit at that point. But I think ultimately we're seeing, GLD, so gold ETF flows coming in at sort of record levels. We saw the highest ever daily inflows in February, second highest daily inflows at sort of, I think not last week, the week before last as well. So there's clearly a lot of demand for the asset from a retail perspective. But again, from a retail perspective, from a central bank perspective, again, this is a very small piece of the puzzle from a global gold perspective. But I think for now, when we're sort of in this stage of uncertainty, it's going to be an asset that investors continue to sort of turn to. Data clearly shows that when we sort of getting these stock market corrections, when we get these stock market sell-offs, gold sort of, doesn't move with the same rhythm. It doesn't necessarily always outperform, but it certainly offers that sort of staple protection in a portfolio that investors look towards.
Cool. All right, Josh, CoreWeave, new IPO. Any interest on the eToro platform?
Look, it was kind of sort of one of those IPOs that sort of was a little bit of a dud in the end, really, wasn't it? They sort of cut the IPO, fundraising sort of a little bit short already. It was a bit flat. I think, again, in this market, pretty hard to sort of try and excite. But again, it comes at a time when I think we had some commentary from Alibaba sort of talking about the sort of the over demand or the bubble, if you like, in AI right now, which obviously put a bit of a dampener on sort of AI. And of course, really right now, investors are sort of narrowing in on valuations and narrowing in on where there is value in the market. They're sort of trying to focus for quality. So look, CoreWeave is a business that I think in any other market would do tremendously well. But when we're looking and talking about risk and we're talking about AI, certainly up there in terms of those valuations sort of being stretched. So unfortunately, it's come to market probably not the best time. Certainly we will see interest from our investors around anything to sort of do with AI, especially a name that's backed by Nvidia, and it's just sort of produced a massive deal with OpenAI recently. So look, I don't think it's obviously a great time for them to sort of go public, but I think it will be a stock that remains heavily in focus over the next year.
Got it. Thank you, Josh. Love your work. We'll see you soon.
Thanks, Nadine. See you soon. Josh
Gilbert there joining us from eToro, and CoreWeave was the stock of the day. Let's get another view. Mark Moreland, Value 3, and Mark Gardner from MPC Markets.
Got $8 billion in debt. They originally were trying to raise $4 billion in this listing, and they ended up with $1.5 billion. Last year they did $1.9 billion in total revenue, of which 60% of that was from Microsoft. Now Microsoft's already come out and said a few comments about reducing up to 1 gigawatt of processing power. They're pulling back from what was a very aggressive expansion, and yet CoreWeave totally relies on Microsoft as their main income. So that's a bit of a red flag.
The depreciation of these. Look, I mean, throw Moore's law out of the window, because Nvidia at the moment, the pace at which they're developing makes Moore's law look slow. Like it, that new, and we'll get to obviously Nvidia next, but those new, the new chip range. I mean, basically, it's what 10 times plus now you can connect all these. So they're in a way, this would have been brilliant to be floated maybe a year ago. I think they're a year too late to market, and then obviously the announcement of the new technology from NVIDIA really increases the depreciation on that.
So I'll have to let you make your mind up about that one on your own. I don't know a whole lot about it. All right, let's get to some of these market leaders locally. Aurora mentioned that it was having some trouble with French regulators for that Saver Glass acquisition. Apparently before Aurora took over, there was some shady dealings, but Aurora says that they are confident that they will be able to work on this with the regulator, and there is nothing to see here anyways. And then we've got WiseTech. So as I mentioned, an outlier today in terms of the tech sector performance, and we've got WiseTech up with the company saying that it's working on a CEO succession plan with, markets and shareholders obviously a little bit nervous about the key man risk. It says that it plans to update the market on its succession plan for its Richard White founder in the coming weeks. So the new directors will be considering that plan, and it's also continuing, the board is continuing to interview additional directors. All right, Data 3 as well, not seeing any news. TPG as well, and flipping the page to the laggards, we've got the likes of Light & Wonder, of Pilbara, of Zipco, Champion, Life 360, just soured sentiment. Can't see any distinct news associated with those guys. All right, and if we get into the smaller end of the market, we've got some of these metals companies on the list. So Medallion Metals, Strickland Metals as well. I dare say gold would be a theme there. Flipping the page to some of the laggards though. And on the losing end of the spectrum, we've got Orion Minerals, Antares Technologies, Decider AI Industries as well. Okay, coming up tonight, we get the U.S. Dallas Fed manufacturing activity for the month of March. It's tipped to ease to minus 8.3 from minus 8.3, I should say, to 12. So falling deeper into contraction. So tomorrow, we talked about it already, RBA rates decision, widely anticipated there will be a hold. Everybody will be listening to the commentary coming from the central bank in terms of tariffs and what any type of a global slowdown, like the impact of a global slowdown on, the Australian economy. We will get a home value index, home prices expected to increase by 0.3%. And we get retail spending for February expecting to have risen by 0.2%. That's according to CBA, at least. Okay, so final figures here. That's the CBO Australia Index, although I do always like to take you through what happened on the S&P ASX 200, finishing down by 1.7% to 7,843. E-minis still coming under pressure, more than a percentage point lower for the NASDAQ E-minis. Gold is trading at 31.17, so 3,117. Brent and light crude still under pressure. There were other stories out there today, of course, we didn't have time to speak of. Macquarie moving on uranium miner Boss Energy, saying that it's upbeat. We saw Andromeda's Metals gaining on a $47 million debt refinancing. And Southern Cross Electrical jumped. The shares really jumped on buying out Force Fire Holdings. And so there's lots for us as investors to keep our eye on. Gold miners eyeing that third straight monthly gain. I thought I would just leave you with something positive, just in case you're looking at that share price performance and wondering what is happening. You should keep us tuned in, catch up with what you may have missed. We're ausbiz.com.au, and we'll see you from 9:45 tomorrow.